Welcome back, you guys. I get a lot of questions from friends about dividend investing. What exactly is dividend investing and how does it work? Well, dividend investing is investing for income. By that I mean companies that pay a dividend, usually quarterly, paid out to the shareholders. You being the shareholder, you make a steady amount of income or a semi-steady amount of income every quarter by holding onto the stocks. So I make the decision I want to do dividend investing. What kind of companies do I invest in? Well, dividend companies are usually large, very established companies. The difference between a dividend stock or a value stock and a growth stock is after a company has been around for a long time, they start paying their shareholders dividends quarterly to keep their stock. Where growth companies generally do not pay a dividend, but they reinvest all their money into the company to grow the company. For example, Apple just started paying a dividend about 2 years ago. They've been around since the 80s. They continued to grow their company to the mammoth company that it is, and now they've started giving a small dividend. A lot of dividend paying companies are large established companies that are industry leaders in their industry. Think Coca-Cola, think Verizon, think Home Depot, think Bank of America. These sorts of companies that have been around for a long time that want to keep their stock valuable, so they pay their investors quarterly to keep a dividend. Now, as I said, investing for dividends is investing in income. Because you know you're going to get a percentage or a dividend every quarter, that's money that you can count for to be semi-reliable every quarter. Now, the dividend does change a little bit based on the stock price and based on how the company's doing. But an average dividend out there, a good average dividend is somewhere in the ballpark of 3 to 5%. So if a company has a stock price of $100 and they have a 3% dividend, you would get $3 per share per year for that company. Remember that is annual percentage rate. So each quarter you would get 1/4 of that 3%. Okay, some of the sectors that have big dividends, telecom companies, Verizon, AT&T. What about utilities? Utilities companies are usually smaller, but think energy companies, water utilities, pipelines for oil companies, these sorts of things. Financials are banks and stuff like that. Think JP Morgan Chase, Bank of America, Wells Fargo, big companies. Consumer staples is another sector. Think Procter & Gamble. Think, again, Coca-Cola. Things that people are going to use all the time. Even if there's a recession, we're still going to have to buy toilet paper, right? We're still going to have to buy toothpaste, these kinds of things. Healthcare is another sector. Think big companies like Pfizer, Johnson & Johnson, some names that we've heard of. What about energy companies? Think Chevron, ExxonMobil. Consumer discretionary, think Home Depot, Target, McDonald's. Things that people would most likely go to even if there's a recession. And of course, I already did a video on REITs, that's here. If you check out REITs also pay a regular dividend, some monthly, some quarterly. Now, let me say that I'm not advocating you invest in the companies that I've mentioned. I've just mentioned some names to explain how dividends work, you guys. Anytime you invest, you need to do your homework. For most people, dividend investing can be summed up easily with doing it either from an ETF or mutual fund, index mutual fund. Some of the big ones, famous ETFs out there that people use, the ProShares Dividend Aristocrat ETF, ticker NOBL. Dividend Aristocrat is a company that's increased its dividend every year for the past 25 years. So these are companies that you can depend on not going broke tomorrow. Vanguard High Dividend ETF, ticker VYM. Vanguard Dividend Appreciation ETF, ticker VIG. And if you want to have some REITs, as I said in my other video, they're Vanguard REIT ETF, ticker VNQ. These are some easy ways to get yourself some dividends. Now, quick word about dividends. Dividends are payable as income when you receive them in that year. Let me go into that a little deeper. If you have space in your tax deferred retirement accounts or tax sheltered accounts, I use my Roth for some of my dividend stocks and my dividend ETFs, because then it's sheltered from the taxation for the dividends. If you don't, if you're doing it in a taxable account, you guys, here's something you need to think about. Okay, we're going to talk about qualified and non-qualified dividends. So, for a dividend to be qualified, the company has to be an American company or a qualified international entity that does business in the United States. Otherwise, it's non-qualified. Okay, so first of all, non-qualified dividends are taxable at your ordinary income level. So it could be 12%, 22%, 24%, all the way up to 35%. Now, a qualified dividend is taxable in the way that a long-term capital gain is, so it's the same rate. So if you are married filing jointly and you make between $78,751 and $488,850, your qualified dividend rate is only 15%. Now, if it's above that rate, you get taxed at 20%. But for example, a person that makes that kind of money is in the 35% tax bracket if the dividend is non-qualified. So this is something you need to think about if you're going to invest in dividend stocks if you have them in a taxable account. Remember, the dividend, the money that you make on the dividend is payable in that year. Now, for the dividend to qualify, it also you have to have held it for at least 60 days during the 121-day period that began 60 days before the ex-dividend date. The ex-dividend date is the date that you have to own the stock and able to qualify to get that dividend. So the idea is long-term holding, you guys. Dividend stocks are not ones that we buy and sell. You know that I'm a big believer in buying and holding my investments. I don't buy a product unless I plan to hold it forever. Now, at the end of the year, your brokerage house is going to send you a 1099 DIV form, and that's going to have the dividends. It's going to have a box for qualified dividends. It's going to have a box for non-qualified dividends. When you enter that into your taxes at the end of the year, you'll pay different rates based on whether the dividend was qualified or not. The important thing is to try to keep those in tax sheltered accounts if possible, so that you don't have to pay. If you have it in a taxable account, you have a couple of options. You can either put away some cash knowing that at the end of the year you're going to have to pay taxes on those dividends, or you can actually have your brokerage account withhold taxes as you go along during the year. Now, I personally plan for about $1,000 a year in dividends on my accounts, so that way I just know that they're going to be there and I'm going to be taxed on them. Now, I never know, depending on how long I've held the stock, whether it's qualified or not, but remember, the longer you hold it, the better. Is dividend investing for everybody? No. Should everybody invest in dividend stocks? Certainly not. Remember, if you're going to invest in a dividend paying stock, an individual stock, you guys, do your homework. Look at their balance sheet. Know their price to earning ratio. Know these kinds of things. Is the company solvent? Just because a company pays a 9% dividend, that may actually be an indicator that the company is in trouble because they want to pay a higher dividend so that the investors aren't going to sell the stock. You know my first rule investing: if you don't understand it, don't invest in it. So don't go invest in some company that your friend told you about if you don't understand what they invest in. I'll give you an example. If I can't explain the company I'm invested in within 30 seconds, I won't buy it. Coca-Cola. It's the biggest company on earth for soft drinks. There, I explained it. We know that's a company that's going to be around. Once again, I'm not an investing professional. I'm not a financial planner. please do not take my advice as the way to invest. Do your homework. I just want you to get some information so that you can make better decisions in your investing future. If you've enjoyed this, give me a thumbs up, subscribe to the channel, leave me a comment. If you have any questions or comments about dividend investing, let me know. Let's talk about it. If you have another idea for a video, put it in the comments. I will make them, you guys. All right, thanks a lot.